The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the November 26th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin with our empowering beliefs out here, and it is called Become Your Own Electrician, the electrician of your beliefs. Now, you know that the beliefs have the power to create as well as the power to destroy. You and we've got that awesome ability to take any experience of our lives and create a meaning that either disempowers us, none of us do that out there, or one that can literally save our lives and empower us to places we never even dreamed of. Think about it like this. There's only one thing that you can control in life. Only one thing, folks. The meaning that you give something. Now, that's the beauty of the markets we trade. We've got bulls. We've got bears. One that sees an event as a selling opportunity, one a buying opportunity. Your beliefs, the meaning that you give to events, to statements, criticisms, whatever it is. You are the only one in control of that meaning. Now, when you realize that, you realize just how cool of a power that you actually possess. And why is that important? Because what we can or cannot do, folks, what we consider possible or impossible, it is rarely a function of our true capability. It is more likely a function of our beliefs, who we are. And that matters because why? Because we're all striving for personal breakthroughs, and all breakthroughs begin with a change in what? A change in beliefs. How do we change? Well, I found the most effective way to change is to get our brain to link and associate massive pain to our disempowering beliefs. We must believe at the deepest level, at our core, that our disempowering belief has cost us in our past, it will continue to cost us in the present, and ultimately will only bring us pain in the future. That, folks, that's called the Charles Dickens process. You know, sometimes knowing what we don't want is just as important as knowing what we do want. I think knowing both, though, is key, because once we rid ourselves of a disempowering belief, then we must replace that and associate that with tremendous pleasure to the idea of adopting a new empowering belief. Maybe it's a strategy. Maybe it's a trading strategy. Whatever it is that you're doing in life, you want to get rid of the pain and just simply replace it with pleasure. Each of us can do that. And we must know that at any moment, that means right this very second, at any moment, that we can make a change, and that change will change the course of our life forever. Could be the next person we stand behind. Might be something that is said on the air. Could be somebody that you sit next to on an airplane. Could be the very next phone call you make. Maybe it's the next phone call you receive. Maybe it's the next movie that you see, the next book you read, the next page that you turn. At any moment, you have to be receptive to one thing. Could change everything in our life. And then that one single thing causes all the floodgates to open. And then all the things that you've been waiting patiently for, they will fall into place, folks. I absolutely love being here with you. It is Thanksgiving time period, which I like to rename Thanks Living. So thanks so much for living with us here at TFNN. Let's go check out these markets right now. Flat market out here. Dow's up 9 points. S&P is down 27 cents. NASDAQ down 9 cents right now. Russell 2000 up a point. New York Stock Exchange off 11. NASDAQ up 75 cents. Could be pretty flat market out here for the next couple of days. You're just trading with inside a tight trading range. But you can give us a call at 877-927-6648. Be happy to take a look at your stock chart. Do anything I can to assist you in your trading. If we take a quick peek across the globe, the DAX is down 5 points. No big deal out there. FTSE struggling to get over the 2007 mark out there. It's down 43 points right now. Asia last night, really a flat session in Shanghai and the Hang Seng. Nikkei was down 0.6%. In fact, let's go check on the Nikkei. Excuse me. Sorry about that. let's go check on the Nikkei out here. Let's go check on the world markets, see what they're doing. Then we'll peek in on ours. If we take a look at, where's my world market out here? Come on, it should be right there. It should say world. Must be right in front of my eyes. Why is it that, come on, I can see it. There we go, world. I don't know why it says World 0901. I got to change that. But let's take a look at the Nikkei out here. The Nikkei is broke out of a consolidation range. It wants higher price. Wants to move up to about the 16,190-ish type range, maybe a little bit lower, maybe 16,000, anywhere between 16,000 to 16,190. 16,190 is your A to B equals CD on the way up. Broke a consolidation level. The yellow box you're looking at on my screen, those are the consolidation areas inside of the Nikkei. You can see last night's pullback. Let me pull this consolidation box off to the side. We'll put it right there. No big deal. No big deal with the pullback inside of the Nikkei. Nikkei in Asia was the one index that was down the lowest. Now, what you can see out here, if you take a look at the bottom middle of my screen, you'll see a red squiggly line. We can see here that the Nikkei on Monday evening, Sunday night out there, Monday morning, Sunday, what it did was it moved into that extreme overbought condition. So it needs to work that off by just simply moving sideways a bit out here. So no big shakes out there. We take a look at the Hang Seng out here. The Hang Seng, that was a flat market yesterday. It's got an A to B equals CD to the upside that it's trying to complete. It wants to get up to about the 24,552 mark out there. So last night's action, not a big deal. Shanghai also a flat market last night. No big deal there. It also has an A to B equals CD that it's trying to, first it's got to make the 100% move of a move, which will take it into the 2330, 2376 type range out there. Could even get up to about 2617 if it can clear the 100% move of a move. It does have a nice A to B equals CD pattern, and so far, coming off of the C point, a relatively explosive move out there. That's what that market looks like. The DAX here trading up above its highs. Let me put this on a longer-term chart out here on a monthly chart. So the DAX well above its. Now, this was traveling in the consolidation zone out here. So it's on its way to the 1 to 1.272 A to B equals CD up right around the 10,085 level. Nothing bearish about the pattern that we're looking at here inside of the DAX. That is the monthly chart. A little bit different on the chart for the FTSE 100 over in the UK. It just struggles. It's just trying as hard as can be to get up over its resistance area. Now, look, folks, when it does get up over resistance, if it should get up over resistance, it's going to be strong support, because this is the level goes back to 2007. It has attempted to get up there a couple of different times. It's not really backing off much. If we take a look at the weekly chart out here, until it breaks below the session from October, the week of October 25th, that low is 66.17. It's really kind of setting up here small-bodied candles with inside a wider body out here. That sets up a potential continuation pattern to the upside. So once it clears that 2007 area, the FTSE wants higher price. Let's go to Ron in Tampa. Ron, thanks for calling. Thanks for holding. How are you this morning?
Fine, thank you. Good morning, Steve. Thanks for taking my call.
Hey, my pleasure. You getting all set for Thanksgiving? You ready for some cold weather?
No.
You and me. Are you originally from Florida, or did you move down into the Tampa area?
No, born and raised in Tampa.
Oh, okay, great. Yeah, we don't like cold weather, do we?
Not used to it.
Yeah, exactly. But that's okay. We're complaining, and it warms up to 60, 70, something like that. It's a little bit colder up north. So you wanted to take a look at Allied Nevada, ANV. Tell me what you're doing with it first, and your time frame and so forth.
A while back, I'd been in on it, and then I got out at a small loss, and it's gone down since then. And I just was wondering if you saw an entry point, or just stay away from it, or what.
Well, if we, Ron, if we take it back all the way on a monthly chart, what it is doing out here, it's not one of the stronger gold equities. It's trading inside the swing point from October of 2008. And the high of that swing point is a 577. The low of the swing point is $1.56. It's trading at $3.15 right now. Good chance that this thing will move all the way down to $1.56 before it provides us with the next piece of information out there. That's what the monthly chart is communicating to us. Let's go see what the weekly chart might be showing us. So the weekly chart here, shows that once it broke the swing point from August in 2013, That said lower price. Let me try to pull this thing back here. The weekly chart, the weekly swing point is October 24th of 2008, and the high there is 326. So it's inside that swing point. Now, it's inside there on lighter. It's inside that swing point with more volume, and there sets up the $1.56 again. So I would say if you're looking for gold equities, probably Allied Nevada is not the one to be focused on out here. And in order to go into one of these gold equities, what I think that you want to do is you want to make sure that you've seen the reversal in the metals, in gold and silver out there. And that's the point in time that you want to come in. And then what you want to do is you want to try to find something that is got the strongest trend that's underway. I've created a tool. During the first hour, was showing the tool that I have created. In fact, if we take a look at Allied Nevada, I can put that tool up on the screen. Give me a moment to pull this back here. Here's Apple's going to pop up on the screen. But let's take a look at ANV. And Allied Nevada here, tells you this thing moved into a strong bearish mode right here. Now, I don't know if this would have helped you when you actually exited the trade, but on November 2nd, you got a clear signal that it was time to go ahead and exit this trade. And that was at a price level of somewhere around, it closed at about $4.03. And ever since that time frame, it's been in the true sell zone, and that's on the daily chart inside of Allied Nevada. So this trend has not changed on that. Now, the cool part about building this tool here, Ron, that I created, I also have created a little bit of a market analyzer, not a little bit, a big market analyzer that allows me to scan sectors and stocks, and as well as what I've just pulled up on my list here is a number of different metals and mining equities out here. And what this allows me to do in the click of a finger is try to identify what is got a potential bullish trend into it. And a bullish trend you're going to see is going to have some green, green means potential buyout here. And the stock that shows the most strength, the two stocks that show the most strength right now inside the metals market, I'm not saying buy these. I'm saying that when we do see the reversal, these are the ones that you'd want to look at. You've got Agnico Eagle Mines, AEM. That suggests that there is a potential bullish trend that is even underway right now today, which is or has been underway, especially with metals having been hit. Actually, Kinross Gold, KGC, is showing some strength there. I know that's a potential trouble, but here's one that is really nice and strong at this stage, and it's Polymet Mining. PLM is the ticker symbol. This one's got the green boxes all the way across, both on the monthly. I'm looking at a monthly, a weekly, and a daily trend out there. So let's go take a look at PLM for you, because I'd like you to stay away right now from Allied Nevada, if that's okay with you.
Right.
So if we take a look at this one here, we'll take a look at this thing having a nice day today. Hey, Ron, can you stay on through the break?
If I don't drop out, I'm on a cell phone. So.
Okay, great. So we're going to go back to Ron. As long as that cell phone signal is out there, we're going to take a look at one of the stronger mining equities out here today, and that is, what did I say, PLM, Polymet Mining. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 16, S&P is up 1, NASDAQ is up 6 points right now. And going back out to Ron in Tampa. Ron, you still with us?
Yep, still there with you.
Okay, so what we did for you is we identified a really strong stock in a market where, gold and silver, they still may be headed lower. We've actually picked out, in my opinion, what is the strongest equity inside of the right now from a trend standpoint. If you are a believer that the trend is your friend and you want to trade in the direction of the trend, and this is probably a list of, 40, 50 different equities out here. What we've identified is the stock that is in the strongest trend, both on a monthly trend. It gave us a nice uptrend. That was in September of 2012 and November of 2013 on the weekly. And then on the 27th today, nice real confirming a strong trend. Now, as we take a look at this, so of any of the stock equities that are out there, this is one that you want to take a look at. Now, what we want to do is we want to let this thing try to pull back here, maybe to the breakout of yesterday, which would be maybe in the 95-cent range out here. Maybe it's only going to pull back to, $1.06. But this thing here, what it was doing, Ron, is at the swing point low. Do you ever use volume or analysis swing points in any of your decision making?
No, I'm not at that point yet. I'm still learning.
Okay, all right. Well, if you pull open a chart when you get back home, take a look at PLM as a ticker symbol, and if you look at the daily chart, this thing made a high volume low July 2nd, 2013. Now, the cool thing about high-volume lows is they typically get tested. And in this case here, it did get tested on October 24th. The volume that it was tested with, it's a beauty. It was tested with 555,000 shares, which was going against 1.2 million shares out there. And then what we saw here is we saw a little sign of strength. Its first sign of strength really came in on November 5th. It came back to the breakout area, which was the session just prior to that. It did that on the November 15th, November 16th type time frame out here. And, man, this thing really had some volume in this yesterday. Now, one of our guys in the den, Z, says that there's been some insider buying inside of this equity. So my suggestion at this stage is this thing is moving into the extreme give me a minute here. I think this is moving into the bought territory here, and potentially it's pretty much at the extreme level. And with the potential that gold and silver still have not yet reversed, if in fact we see gold and silver make their A to B equal CD down, it's at the point that we see the reversal there that go ahead and pull a trigger here on PLM out there, as long as this thing hasn't pulled back with volume or something like that. But this is the equity that I would suggest you take a look at versus Allied Nevada. All righty?
Well, thank you so much for all the information you share with us, and you have a nice holiday.
I will, and thanks so much for calling. You do the same. Be safe out there while you're driving around.
Bye now.
All righty. Let's go. We've got Ron in Jackson, Mississippi. Ron, thanks for calling. Thanks for holding. How are you today?
I'm fine. It's Brian, actually.
Brian. Oh, okay. Sorry about that. They typed in Ron here in the name, so no problem. Well, Brian, thank you for calling. How are you doing today?
Doing fantastic, Steve. I appreciate it. Last week I called Basil, but I'd already put the trade on Walmart WMT. I bought some puts, some Jan 80 puts.
Okay.
And it's been in the trading range since March, and it approached the resistance zone last week. And I went ahead and put the trade on. Since then, the announcement came about the new CEO.
Yes.
And my question is, should I, today is a pretty important day, right? I mean, it broke above the resistance zone yesterday. So I wanted you to take a look and see if I should cover the puts or just what you
so if we Sure. So if we take a look at Walmart, and by the resistance zone right here, you're using what? Just simply the swing point from May 15th? Is that what you're using?
Yeah, actually, if you go back to March, you had May 15th, and then it went. There was another point at it was like 6.6 or 6.5.
Okay.
I mean, it didn't get all the way up there then, but it's traveling in a range kind of.
Yes. So it's up above that. It's up above that that little sideways consolidation that you're looking at. Let me draw that on the screen for the folks that are just listening in. In essence, what Brian is looking at is basically this type of a consolidation zone here. So what Brian knows is that when you break a consolidation area, which is the May 15th swing point high, 79.96, you can make a move that is equal to or greater than the actual consolidation. So that would be a time to be of worry. Now, it is up and above it yesterday with lighter volume, 5.6 million shares. You would like to see it get back inside that range out there. But let's take a look at this other tool that I have developed. Can you hold on through the break here with us, Brian?
Sure, no problem.
All right, so we're going to go back out to Jackson, Mississippi with Brian. We're going to take a look at Walmart. Then we'll go out to Dallas, Texas, and talk with Tom about gold. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 26. S&P is up 1.5. NASDAQ is up 7. We're going back out to Brian in Jackson, Mississippi. We're taking a look at Walmart. Now, Brian, are you able to watch us on Tiger TV? Are you able to see my screens?
Actually, I'm watching on my brokerage firm's chart.
Okay, all right.
I've got some tools on it, though. Okay.
Well, the tool that I've got up on my screen here right now, this is a proprietary tool that I've developed, and I developed it. You know, when I take a look at what I like to always do is step back and take a look and see, you know, what did I miss? What have I missed on trades that I was in, should have stayed in, got jostled? I don't know if you've ever been jostled out of a trade before or not, and you were right on the trade and you shouldn't have gotten out. So I have a number of times, and I said enough is enough. I want to create a tool that allows me to stay in that trade longer, especially because you work so hard to get that trade right. You know what I mean?
Oh yeah.
And so it's when tools start to fail, where you start to say, well, what is it that that I was missing out there? And that's what I'm showing on my screen here right now. And I've got the Walmart chart up on my screen, and it's a daily chart for Walmart. And this tool here, and it works. What's nice about this is it takes away all of the guesswork. And what this tells us right now, even though Walmart, you picked an area inside of Walmart that was potential resistance, because of the trading range that it was in. Mm-hmm. What this is also telling us here, right this very second, is that ever since it came off of the lows back here, October the 7th, really was October the 8th when it changed its trend, went into a uptrend. And quite frankly, Brian, ever since October the 16th, this thing has been in a very strong, as strong of a uptrend as it can get. And what I mean by that is that the selling pressure on this has never been able to push down to the normal levels where it should push to, and it tells you that it's really had buying pressure inside it ever since that time frame. So it is not showing, it's not giving, other than potentially trying to sell the top tick, it's not giving you any indication on the daily chart of any kind of a weakness whatsoever. So and yesterday's move, you pointed out pretty aptly well. They changed the CEO out there, and you would think that might have some negative impact, and instead the stock actually gapped up. So a gap up coming into a resistance area, that usually says be cautious out here. So you've got Black Friday coming. That's what the daily chart is communicating to us. If we take a look at the weekly chart right now, the weekly chart is also still inside of a strong trend. It's in a super strong trend. And the real key, I know that you were paying attention to the candlestick here on May 17th, just simply because it was a swing point high. But the support on this, and here's what, if you're going to stay in the trade, what you would really want to be paying attention to is on a weekly chart is the August 9th candle, because that was the bearish reversal signal. That was a bear sash candle, and the high of that is $79. So you want to see this get below $79 pretty quick. You can use as that zone of yours, that May high of 79.96, but more so than that, you want to see it get back below the high from August 9th, because old resistance, which is what that candle should have been, should become new support out there. And if it doesn't break through $79, I would be pretty careful. On a monthly chart, let me just switch over to the monthly, see what we've got here on the monthly chart from a signal standpoint. Even on the monthly chart, this thing is in strong bullish mode. And what I use for the monthly chart would be the candle signal from May on the monthly chart, and that was a bearish engulfing candle out there. And then you had another one the month of August 8th. So this thing is now up above that level of 79.96. If you're kind of flat, to break even or so on the trade, I don't see the signals here that say that you should be on the short side of this trade, at least not just yet, on those three time frames.
Yeah, I was just taking a shot at it last week because it was approaching that zone that I was talking about, and I was just looking at this as maybe a false breakout, but really won't know until it stops making higher highs, I guess, between today and tomorrow.
Yeah, what I love about this tool here that I've created, number one, it all depends on what you're trying to accomplish. If you are trying to sell that top tick in order to be able to get into the trade, at the right price, and you've done the right thing there because you identified where the battle should have been fought. But in this case here, when I just take a look at the objective daily tool that's out here, it just says, this thing has had a lot of strong buying pressure, not selling pressure.
Right.
And we haven't seen that change out here. And the cool thing about Walmart is when you do see some selling pressure out here, you'll still have plenty of time because of that consolidation zone to chase it all the way back down to the bottom. So that's the cool thing. That trading range, it's a good $10, $12 or so. Let it turn, and then go ahead and jump on the short side of the trade, in my opinion.
I'll just stick to my plan that before I called you, I was going to get your opinion, but I'm just going to, if it doesn't close back below yesterday's low, then I'm just going to probably get out of it and try it again later.
Yeah, exactly. You just try it again. If it gives you that piece of information that you need, then you were right on the trade, and you got the signals, at least what the buyers and sellers were telling you what to do out there. All righty?
Well, look, man, have a nice Thanksgiving, and
I will.
Appreciate
I will. You do the same, and you have a great Thanksgiving as well. Let's go out to Dallas, Texas, to Tom. Tom, thanks for calling. Thanks for holding. How are you? Tom, do we have you? I don't know if we've got Tom in Dallas, Texas. If we don't, look like Tom wanted to look at, I believe he wanted to take a look at Rand Gold Resources, GOLD. Now, there was inside the den, there was some questions or asking me to take a look at Freeport McMoran as well. Now, what I'm putting up here on my screen is this. Tom is on the line. Tom, you there?
Yes, I am. Can you hear me?
I can, yeah, absolutely. Hey, thanks so much for being patient. Now, how are you doing in Texas? Didn't you guys have some bad weather, some snow or something move through there yesterday?
We had some. Well, I don't know in the Delta area we didn't, but we're down near freezing. So some places we had a little bit of dropping sleet, but no accumulation or anything.
All right, good. All right. So now is it supposed to warm up for Thanksgiving? Are you guys going to have a warm Thanksgiving?
It is. It's supposed to be, I think, at the highest near 60. So that's
okay. All right. That's great. That's great. Well, thanks so much for listening. Did you want to take a look at Rand Gold, or do you want to look at actually a gold contract or something else? Tell me what you wanted to look at.
Well, the Rand Gold, I'm wondering if it's going to go back down and test the double bottom at 60 again.
Okay, so we take a look at Rand Gold. It's in a sell zone most certainly right now. GOLD is the ticker symbol on this. And Rand Gold, you're looking for this to go down and test the recent, which lows are you looking at out here? Are you looking at August lows, or are you looking at July lows?
Well, that's what I'm wondering. I'd like to get into it, but I don't want to get in it here in this range where it's at another swing point. But if it's going to continue, if it looks like it's going to continue to go down and test the two other swing points again.
Yeah, you know what it was doing yesterday, and it's trading in right now. It's trading in at least the August swing point. That only has 836,000 shares there. Yesterday it was pushing in with 984. So that's not necessarily a good sign when you're pushing into a swing point with volume. That says, well, it says it should at least go test the low of that, which is 66.05 out there. So, so it should do that. Now, if it breaks 66.05, that says, you know what, it comes all the way back to really where it broke out. It had a nice sign of strength on July the 12th. It did 2 million shares to the upside, and so you're looking for, in this case here, maybe somewhere in between the 61.67 to the 65.05-ish type range out here. What you've got to do with Rand Gold Resources, just like all of the gold equities, in my opinion, is wait to get a reversal signal inside gold and silver themselves. Now, they gave us an indication yesterday that with the key reversal sessions and the test of the swing point lows, that maybe we're about to see a change in trend out here. But here's the cool thing. If we are to see a change in trend, I don't see anybody on any of the financial talk shows saying anything positive about gold. So let it prove itself to you. Let's actually wait to see that change in trend, because we'll have time to jump on board. It's not like this is going to be a train that's going to jump and take away, without us or what have you. So that I would be patient. I would be a little bit more patient on this. And actually, the equity that I would be taking a look at, we had a caller earlier, I think it was Polymet, PMT. I would take a look at that one, too, because that one's nice and strong in a weak market out here right now.
Okay.
Does that help you?
Yes, sir. Thank you so much.
Or is there something else that you were looking at on Rand Gold that you wanted me to take a look at for you?
No. I think that when it hit its sign of strength, it jumped up like 15%, and so sometimes it seems like you got to anticipate and put your order in, and otherwise you're going to get left behind really, really quick with this thing.
Now? What it did, it's had a counter trend rally. That's all that it's actually done thus far, and it's got some pretty significant resistance to the upside here. So it's on a weekly chart, and I'll put on. I've got the weekly chart on my screen out here. If this thing closes below the weekly chart, October 11th low, 67.68 out there, and it's trading at 67.82 right now. It's actually communicating to us that it wants to trade into those July lows. So if you're looking to actually put a trade on, I would actually, have that trade on right around the 60.42 mark versus 67.80 right now. So I would just be careful. We haven't seen. There's a lot of overhead resistance inside all of these gold equities, and there have been a couple of good buying opportunities, but they've been trades versus really investments at this stage. Sure. I think you've got. I really do think you've got time. I'd rather see you be pay. I would at least trigger it with gold actually making a turn, and we're not getting that confirmation yet today. At least not as of 10:45 this morning. Okay.
Okay, great.
Hey, Tom, thanks so much for calling and listening in.
Happy Thanksgiving.
Happy Thanksgiving to you as well. Let's go to Mike in Dallas. Mike, thanks for calling. Thanks for holding. How are you this morning?
Hey, I'm doing great. Thank you for asking.
Oh, that's good.
I just wanted to ask just a general question on the Dow futures.
Yes.
And what do you think over the next several days? What are your thoughts on the Dow?
You know, the Dow has, so if you take a look at the Dow itself, Mike, you know, the Dow is actually the strongest of the indexes right now, to a certain extent with regard to its moves. There's nothing bearish. There's no overhead resistance inside the Dow. So what it's going to take some really bad news and some really massive selling in order for the Dow to reverse course, reverse directions. In fact, the Dow futures on the daily chart that we're looking at in extremely strong bullish mode out here. I mean, the sellers have not, even on the daily chart, have not even come close to having anything other than an occasional day of selling out here. And the last time that we saw any kind of reversal signal takes us back to October 30th out here. So on the daily chart, it's telling us it's in a very strong bullish mode. On a weekly chart, it's also telling us that we're a real strong bullish mode out here. In fact, the Dow would have to get below the August 2013 high out there, which is at 15,597. That's on the futures contract. So strong move on the daily, strong move on the weekly. If I put the monthly chart for the Dow up on my screen here right now, we're going to see it's in super strong mode there. Its bearish reversal signal or bearish engulfing candle came during the month of August, the high of which is 15,600. You know, you're at 16,000. This wants to move to 16,600 or so, which was the 1,000-point consolidation level that it was traveling in. Now, that's just simply on the daily chart out here. What's the time frame that you're and one of the other things is when I take a look at it from a monthly standpoint, that month of August was very important because that was a key reversal session inside of the Dow, and that should have acted as a strong area of the market reversing, and it didn't. And once we got price to close above 15,658, it was sending a message that it wants higher price. And I think it's in the 17,000 range. And if we take a look at the longer-term chart out here, this thing has, it does have some resistance. You know, I can identify the resistance, and that's just simply a trend line that comes off of going back to 2000. So, Mike, if you go back to the 2000 high, which was 11,750.28, and then you take a look at the 2007 high, which was out at 14,198. If you draw a trend line along those two levels, your price is running right into it right now. But that doesn't mean that it's going to back off. So it's going to need some real serious bad information or something. Tapering, who knows what it is? I don't know what it is. But right now, you know, at 1049, it's pretty strong out here. What are you seeing? What is it that you're looking at that maybe you're concerned with, or something that I can look at with you? That or what's it?
I was just looking at the other we'll say the competing markets, the NASDAQ, the Russell, and the E-mini.
Okay.
And I see that the Dow, like you said, I believe it wants to go up. It wants to go higher, but there seems to be reluctance on the other three markets.
Yes. Well, do you want to hold on through the break, Mike?
Sure.
Okay, we're going to go back to Mike in Dallas when we get back from this break. We'll talk about the other markets as well, the NASDAQ Composite, the S&P 500, try to bring this whole thing in here. Right now, the Dow's up 17, S&P up 1.5. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 16. S&P is up about 2. NASDAQ is up about 9 points. We're going back out to Dallas, Texas to speak with Mike. We're taking a look at just really kind of the indexes out here. Now, you know, Mike, as I take a look at 2013 or just trading in general, you know, sometimes when I take a look at my biggest weakness, and that's why I always like to focus on what was my biggest weakness, it was letting some of the daily noise get me out of trades. It was paying too much attention to the noise versus the actual trend. And that's why I focus so much in the last 6 months, really creating a unique trending tool and an ability for me to be able to take a look at anything that I want to on a monthly, daily, weekly, whatever intraday time period, just to understand what the trend is. And what I can tell you is that on a monthly time frame, weekly time frame, daily time frame right now, the Dow on the weekly and the daily, strong uptrends. The transportation index on all 3 time frames up. NASDAQ 100 is in nice. And I've got this on the my screen here if you're watching us on Tiger TV, New York Stock Exchange, NASDAQ, S&P, they all are in nice, strong uptrends. Now, on a monthly chart here, the Russell 2000 as an example, it's actually completed a 1-to-1 A to B equals CD. It's done that here this month, but it actually wants higher price. It's trading at 11.28, and somewhere over the course of time, it wants to get to 13.50 out there. There's no bearish signs out here. I mean, it wants higher price without a doubt. When we take a look, as we speak right now, and all you and I can really do is deal with the information that the market throws at us right now, and just be willing to change when we get new information. At least that's my approach to it. Would that qualify as your approach as well?
Absolutely, yes, absolutely.
And so when I step back and take a look at the NASDAQ Composite, which had been considered to be the weakest. Now we're talking about it being over the 4,000 level and actually getting all the way back to the 2,000 level here. It has a price projection. It was traveling in a sideways consolidation zone from 2001, and it broke out of that zone with some conviction. Really, it finally broke out in November of 2012 out here when our markets really made their lows. And this has a price target of 4,300, a minimum price target of 4,300 on it. It's at 4,000 right now. So it has room to run to the upside. And there have been no bearish reversal signals on the monthly chart. Inside the NASDAQ Composite, there have been no reversal signals other than October of 2012. That's pretty strong.
It is. Well, very good.
So and the S&P 500, the same thing. So it looks like the S&P wants to get into the 2350-ish type range out here. So, but like I'm willing to say each and every day, let me take a look at the information that the market throws at us. What is the larger trend, which I'll consider to be the weekly trend? And right now, everything is in bullish mode with the exception of the HUI, the MX Gold Bug, and the VIX, which is in a downtrend. Otherwise, everything is in uptrend right now. All righty?
Well, I do appreciate it very much, Steve. And you and your family have a wonderful Thanksgiving.
Thank you. Thanks so much for calling. You do the same.
I appreciate your show. Thank you.
Thank you. Let's go to John in Rochester, New York. John, thanks for calling. Thanks for holding. How are you today? You wanted to take a look at... Yes, I can. Thank you. You want to take a look at AEM?
Yep, it's the gold hour, I guess. So anyways, yeah.
That's good. That means we're not at a low just yet. Are you looking to get in? Are you in it? Tell me what you're doing.
I bought it at 25, and I sold half the position at 29. And so I was looking to get back my other half position again.
Okay. I would say let the AEM, it's not a bad-looking stock chart out here. You want to let gold go ahead and turn. But right now, AEM may have some pretty good support at 25.67. That's yesterday's low out there. So it's looking pretty strong. It's trying to change its trend as well. But if this thing gets below 25.67, look out below. I wish I had more time, John, for you. But that's what I would be looking at. Okay?
Okay, Steve. Thank you, Steve.
Hey, you bet. Thanks so much for calling. Have a great day. Folks, have a wonderful Tuesday out there. I look forward to seeing you tomorrow. If you are traveling, please be safe out there. And have a great Tuesday. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.